Will the stock market go higher from here, or will the equity markets just continue taking a breather for now? The markets finished the week flat to down, so where do we go from here? Last week, it looked to me like the markets were poised to take a breather, as I indicated when I said, look, over the past week, the equity markets went up really nicely, while the Treasury markets fell slightly. This is a healthy move toward risk and away from safety, and I'm glad to see it happen. But going into next week, the bottom dynamics and the sector rank acceleration readings are showing the equity markets might just take a breather here. Well, as you'll see when we look at how the markets performed this week, the indices finished flat to down. Look, I don't say this to brag, I say it to hold myself accountable. The metrics that we've developed here give an insight into the undercurrents of what's happening in the markets. And if you can see that clearly, there are times when it gives a fairly clear indication of what might be coming in the next few days or even the next week. So how do things look for next week? Well, let's take a look. So as I said earlier, you can see that the markets finished the week down overall. Not a good look, but pretty much flat to down. And if we look back over the past month, you can see we've had a somewhat of a healthy rally going on here. The ARKK and NASDAQ finishing the best, followed by the S&P, and then both the Dow and small caps finished the past month in the negative column. Not bad, but down a little bit. And then if we look year to date, we're still on track for a very healthy rally here, with ARKK finishing first, NASDAQ second, S&P third, small caps fourth, and Dow last. This looks great. And how do the bottom dynamics look? Well, last week, they were not looking good. You can see that the risk confidence level was declining here, while the bottom confirmation was heading higher and the market was heading higher. This alone, these two indicators alone, with the market going higher, told me that it was likely that the market wasn't going to continue going higher, that it was in fact going to take a breather, which you can see it did here. Now, the other thing is the safety confidence was also rising, which is not good for equities. So where do we sit now, a week later? Well, a week later, you can see the confidence, the risk confidence is shooting higher. The bottom confirmation is moving higher. And then the safety confidence is falling off here. This is looking very good for equities next week. So if I had to call it, I'd say we're going higher, at least early in the week, maybe even for the entire week. And what about risk versus opportunity? Well, if we take a look at this, you can see that the risk level, this red line, is well below 80. In fact, it looks like it's around 65, heading lower. The risk acceleration is just collapsing here. It's down below 30. This is great. And you can see that the opportunity level, while it's dropping off a bit here, is still at a very high level. It doesn't get up here near 80 very often. So this is still great and not giving me any concerns yet. Okay, so how is equity versus safety looking? Well, if you've been watching my videos over the last several weeks, you'll know that the NASDAQ 100 has been solidly in first place for many weeks, not just the weeks showing here, but going back probably 4 or 5 weeks before this. So this looks great. If we take a look at cash, you can see it's been kind of all over the place here. You know, down here in the middle, lower half where we like to see it. And then more recently this week, it's moved up a bit. So this is a little bit concerning. I don't like cash being above number 5, which is not good. The other thing this is telling us, if you look at last week, we had a very, very healthy equity market here, and we had a very healthy looking treasury market here. Well, this week, equity market looks pretty healthy. You can see the Dow is falling off here. Cash is moving up. That doesn't look that great. Gold has moved up. I don't know what that's about. But the treasury market is not healthy. It's inverted. As you can see here, we've got the longest duration Treasuries, TLT and EDV at the bottom. And then we've got the shortest duration Treasuries and cash up here at the top. This is not a healthy Treasury market. So how do things look from a buying and selling pressure perspective? Well, you can see here, if we start out with the Dow, we had a sort of a rally attempt here, kind of a pullback and kind of nowhere. In fact, it dropped at the last minute yesterday on Friday. And you can see that in the buying and selling pressure. Selling pressure, big peak here, then it dropped and now it's coming back up again. S&P 500 looks a little better, but overall a good rally, but you can see it's sort of flat topping here and pulling back. The NASDAQ 100, which has been one of the best performers, great rally, and now has been just kind of flat topping and taking a breather, as I've been saying, using that word too many times. And what's interesting here, though, is if you look at ARK Invest, a very nice rally. And yes, it's flat topped, but unlike all the other indices yesterday, this one ended up closing higher, even though the selling pressure is above the buying pressure. And what about the small caps? Because that also plays into this. So if we look at small caps, a very ragged rally here. But again, yesterday, when all the other indices dropped, ARK and small caps actually went up. And you can see here with small caps that buying pressure is above the selling pressure. So maybe this is another signal that investors are prepping themselves for next week by getting into riskier assets. That could be a good sign going forward. We'll just have to wait and see, though. By the way, the buying and selling pressures don't necessarily give me a great sense of, maybe I should go long this or go short that. They're just kind of an indication, again, another indicator of the undercurrents in the market to kind of give you a sense of what's going on. But I do find these sector rankings very useful. And if you look, this top table is what they looked like last week, a week ago. And you can see that we had Bitcoin technology all across the top here, consumer discretionary, cash. I didn't like that being up here, but it was definitely below all of these higher risk areas. Consumer staples down here, gold, and treasuries way down here. So this looked very, very healthy last week. Well, how do we look this week? Well, this week we've got Bitcoin and technology all stacked up here at the top, just like last week. Consumer discretionary looking good. Boy, I had to take an extra look here to see if I actually had the same week twice, but I don't. You can see that cash and gold have moved. Well, cash has stayed put. Gold has moved up a bit. Consumer staples have stayed put. And treasuries are kind of in the same ballpark. So not a lot of change here, surprisingly, from week to week. But let's take a look at the sector rank accelerations. Those tend to move more quickly and give you a sense, again, of what's going on in the undercurrents of the market. Well, if we look at sector rank acceleration, so last week I was concerned. This was one of the reasons I said the market might take a breather. You had cash and treasuries all up here, gold up here. You had consumer staples ahead of consumer discretionary. We had healthcare, which is a safe haven sector up here. We had utilities up here. So this was really not looking good for equities. And if we fast forward to this week, now gold has moved way up. Not quite sure what that's about. But you can see that cash and treasuries have all moved down quite a bit. Now consumer discretionary also moved down, but consumer staples is now way down here. So this looks to me like it's actually improving, which is another reason I say we could go higher next week. So how have treasuries been looking? Well, you can see here that we had an unhealthy treasury market, and that showed up in the equity versus safety rankings. And you can see that the longest duration treasuries in purple, EDV, finished at the bottom, followed by TLT, and so on, right in order of duration, from long duration to short duration. So this is an unhealthy treasury market with a pullback. How about over the last month? Well, over the last month, you can see we tried to rally here, but ended up the month down. Again, unhealthy. And then if we look year to date, we are now in bargain land. You can see that the longest duration treasuries are below the lowest values back here. So this might be another buying opportunity for long bonds. And what about the inverted yield curve? Well, the fact that long bonds have been falling in value, meaning their yields have been going up, more than short T-bills and notes and shorter term treasuries, those have been actually not going down as much. In other words, their yields haven't been going up as much. You can see that the yield curve has started to uninvert. It's a small amount, but we'll take it. I mean, this was crazy. It was inverted by 1.1% back here, 110 basis points. It was almost 110 basis points here. I think it was 108 or something where it hit bottom. And now it's come back a bit to 101, 102 basis points. So improving, but it's got a long way to go. And the Fed rate monitor still indicating that the Fed is going to increase rates by 0.25% or 25 basis points when they meet on July 26th. And how does all this show up in the buying and selling pressure? Well, it's kind of an interesting picture because before, I'm going to start with TLT. Normally I start up here with the short treasury notes with SHY. But you can see that TLT was really on a nice rally here. And all of a sudden lately, it has just started to collapse where these weren't doing well. They weren't going up at all. And now they're still going down, but they're not going down as quickly as TLT. Same thing with IEI, going down, still going down, but not as drastic of a drop as TLT. And finally, IEF, a little bit better, more flat here to up, but now these are dropping more dramatically, just like TLT. So more of a shift in sentiment to the short end of duration and a move away from the long end of duration. How's gold looking? Well, as you saw in the sector rankings, it had moved up, and I think that's partly because of this little bit of a rally here. It moved up, pulled back, and moved up again. But you can see that the selling pressure is still well above the buying pressure. So I don't know if this is really going to go anywhere or not. Right now, I'd say probably not. Although you can see that the selling pressure is falling here. So if this continues moving higher, selling pressure moves lower, buying pressure moves up, maybe we'll see a rally in gold. Just no way to tell. And what about Bitcoin? Well, Bitcoin's really kind of taken a breather here. You can see we had a huge rally here when BlackRock and Fidelity announced that they were going to start trying to put together Bitcoin ETFs. And you can see that the buying pressure went off the chart and then collapsed. And we've kind of taken a breather here. So not sure where this is going to go, but if we take a look at how it's done over the last 5 days, you can see it really had a nice bounce here on Monday into Tuesday. And then it really started to just kind of decline over the rest of the week. So I don't know if this decline will continue or if it'll turn around and continue higher. As you can see from the charts and the tables, over the past week, the equity markets took a breather while treasuries shifted from the long end to more buying in the shorter duration treasuries. While this might feel scary to investors, it's healthy for the risk markets to take a pause. Even Bitcoin spent the last 4 days of the week moving lower after a nice rally on Monday. The bottom dynamics are showing a likely rally next week, and the sector rankings and rank acceleration statistics are much improved this week. So hopefully we'll see that move higher next week so I don't end up with egg on my face. Until then, I'm Calvin Rose, and thank you for watching Invest Smarter. That's all for now.
What did you say when I told you maybe this wrist wasn't gold proof? Packing my bags like it's all true. Hard to make friends when I'm focused on all these bars feels like Dasani water.